On Friday, we saw the dollar crashing lower while gold is trying to make a run towards our ABC projection. Is Jay Powell pouring more fuel on this stock market rally, or is Jay Powell setting up a major stock market trap? On Friday, Jay Powell gave his Jackson Hole speech and signals at Jackson Hole that weak August job data would punch the ticket to a half-point rate cuts. Now the question is, has the Fed waited too long to cut rates? Are we going to start to see the deterioration of the labor market, which could really put the U.S. economy in a major recession? Now, during the Jackson Hole speech, Powell basically ignored the elephant in the room, meaning how much was the Fed willing to cut rates? Are they going to go with a simple 25 basis point rate cut, or are they going to start to get more and more aggressive? If you guys listen to the Jackson Hole speech, you could sense the nervousness within Jay Powell. They know the labor market could be getting very close to a tipping point, which would be very ugly out here for the stock market. Now, as a friendly reminder, I do want to remind you guys, every time the Fed goes on an aggressive rate cutting campaign, look what has happened to the stock market each time. In the best case scenario, the stock market only went down roughly 27%. So we got to be very vigilant. Even though the S&P 500 was able to come all the way back up to very near the highs from Thursday, where we had that bearish engulfing pattern and really just a stone throws away from making new all-time highs. Keep in mind, this could also be a case where you get a lower high. And we talked about this in Friday's analysis videos. I said one of the most deviant things for the market to do was on this bearish engulfing day, go ahead and get people to start shorting the market down here at lower levels and then go ahead and rip them right back up. Now you've washed out some of the weaker longs with that bearish engulfing pattern. Then you entice new traders to go ahead and go short. You go ahead and rip them up, causing them to capitulate as well. And then you get the bulls ready to jump in, hoping the market's going to push the new all-time highs. But this week we have quite a bit to worry about in the stock market. Could this be a case where we're simply going to go ahead and start to roll down here just a bit? Now, when we come over and look at the probabilities of rate cuts moving forward, look at how aggressive the Fed is projected to get on cutting interest rates. And if you go back and look at that chart I shared with you guys earlier in this video, it always ends very badly. Now, something else we most certainly need to keep an eye on, which would be another warning sign out here for stocks. We also want to keep our eye on the yield curve. When the yield curve uninverts, that's when trouble happens in the stock market. We can see recently, we're starting to see the yield curve go back up. Once we get above the red line right here, the yield curve will then be uninverted. And this has been one of the longest periods in recent history that the yield curve has been inverted. Now, some other interesting developments is when we come over and look at the Dow Jones versus the transportation index, aka the Dow theory. Notice what we've been able to do. We've had a trend line drawn across the tops of the transportation index, and now we've seen that we are starting to try to break above that rising trend line. Could that actually signal stocks are about to make a run back towards all-time highs? We can see the Dow Jones right up here is on the verge of breaking out and trying to make a run to new all-time highs. Then we come over and look at the SPY versus HYG, high yield bonds, and notice high yield bonds have been in this rising channel. Now we've been able to break out. However, when we look at the S&P 500, the S&P 500 has not been able to break out towards this swing point that we had right over here. So are the high yield bonds actually forecasting what stocks are about to do in the very near future? I want you guys to pay very close attention as well, right? We see the SPY right now on the monthly chart. Right now, we're trying to form a hanging man candle. We still have a lot of time left. We have 5 more trading days left before this candle actually closes. We look down here at the bottom of the graph, and what do we see? The Fed funds rates. And I want you guys to pay attention. Here was during the pandemic, right? The Fed started cutting rates way before we started to see the rapid decline in the market. So just because the Fed may start cutting rates as early as September does not mean the stock market is going to fall before September. Keep in mind, we're in an election year. Politicians are going to do their best to try to keep the market at these elevated levels for as long as they possibly can. Now, we still have 2 other major stock market concerns that we need to focus on. But first, we come over and look at the fear and greed index. We are now sitting at 53. Will we be able to shift out of neutral territory this week, or are we going to fall back into fear or even extreme fear territory? We look at last week's investor sentiment survey, a very hot reading coming in at 51.6. It's going to be very interesting to see how this stat comes in the following week. However, when we look at one of the other warning signs for the stock market, that is going to be right here where the BOJ governor reaffirms that rate hikes are on the table. You might say, well, Mike, we're trading the U.S. equities market. Why do I care about rate hikes over in Japan? Well, if you guys come over and look at a chart of the USD versus JPY, when the dollar yen started to sell off, aka the yen getting stronger, dollar getting weaker. That is exactly when we saw the Nikkei come crashing lower. Now, if you guys remember this down day right here on the Nikkei was actually down from high to low on that candle, down about 12% on the session, just shy of that. And from the high down to the low that Monday was down around 26%. Now, why is this important? Well, if you guys have probably heard about the carry trade. So if the yen starts to get stronger, we could see things start to unwind even more so. And that would put a lot of pressure out here on the NASDAQ. Now, we look at the NASDAQ compared to some of the other indices. The NASDAQ on Friday formed an inside day and basically a candle of indecision. We have a small body with a wick on the top, a wick on the bottom, but then we look at the MACD indicator, it's still showing no signs of weakness at this point. I want to make everybody aware, Apex having an 80% sale off all their valuation accounts, $40 reset fees, pass in as little as 1 day, and even more importantly, the activation fee on all accounts is only $85 for lifetime data. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. However, something we most certainly need to pay attention to this week is going to be earnings. Now, we have NVIDIA on Wednesday after the bell. We have CrowdStrike. We have Salesforce, and we have a firm coming out. So we have some potential big movers in this market. When we look at how the market is pricing this in, we see Chewy plus or minus 16% out here on Wednesday. We have a firm plus or minus 16%. We have NVIDIA plus or minus 12 to 13%. CrowdStrike coming in at plus or minus 11%. Then we have CRM, Salesforce coming in plus or minus 8%. If on Wednesday we see some big misses out here, that can start to initiate another leg lower. Now, if we did start to go lower, that could be a case where we set up a high, lower high, and even a larger ABC pattern to the downside. However, if we come over and look at the Dow real quick, we see the Dow Jones is now pushed right back up into the resistance area. We are now above the body of the candle that actually made new all-time highs earlier this year. Now, once we're in that wick, wouldn't it make sense for the market to go ahead and ring the bell so we can go ahead and say another new all-time high? Then we come over and look at small caps, which were absolutely on fire on Friday. Small caps up 3.19%, a very big bullish candle on the way up. And again, we're not seeing any pullbacks in sight. Yes, once we start to get a pullback, some of these gaps may come back and get filled. However, we were able to fill both of those gaps from that very ugly week that we saw in the market just a few weeks back. However, we still don't want to take our eyes off the gaps that we have below us. At some point, they will come back and get filled. It may just not be right here, right now. Now, if we take a look at crude oil real quick, crude oil, we've seen crude oil have a little bit of a bullish move back up on Friday with a big, strong bullish candle. And that's going to bring us into another stock market warning that we need to pay very close attention to. And that's going to be this article right here where the Houthis go ahead and attack a Greek oil tank. And you can see it is not looking pretty out there. However, then we can see U.S. strikes eliminate a senior terrorist leader in Syria. However, now we also see that top U.S. general makes announced Middle East trip as Iran threat looms. Now, is Iran going to attack or are they not? Let me know what you guys think in the comment section down below. But the tensions over the Middle East could flare up in a heartbeat. If that happens, then we could also see stocks tumbling lower. And if stocks are going to come tumbling lower, then we most certainly are going to want to keep our eye on the volatility index, the VIX, which was actually down almost 10% on Friday, down 9.64%. If it would have been down 10%, then on Monday or Tuesday, we'd be looking for a down day in the stock market. Now, as I was recording this video late at night, Israel strikes Hezbollah targets in Lebanon. But what it goes on to say is across northern Israel, siren warnings of incoming rockets were heard sounding early Sunday. So one of the stock market warnings that I was warning you guys just about moments ago could start to rear its ugly head. However, I come over and take a look at Bitcoin, and on this news, I do not see Bitcoin moving drastically. You might say, Mike, why are you looking at Bitcoin? We're talking about stocks. We're talking about the NASDAQ, S&P, and all that fun stuff. Well, those markets are closed right now, and I'm trying to see, is it going to be a risk on or risk off situation for the futures markets when they open on Sunday night? So now as we come over and look at the QQQs on the weekly chart, keep in mind, we still have a bearish cross of the MACD lines, and we got to be on the lookout. Is this going to produce a lower high in the market? You can see out here on the weekly chart, we actually have a selling tail on top of that candle. That's one check mark off for the bears in the market. However, we'll see this week if we come back and we try to overthrow that wick or not, or does this turn into an ABC pattern on the way down? Now, if indeed this does end up producing an ABC pattern on the way down, we can see that would give us a price projection down here about 405.64. However, in the short term, what I would be looking for, if indeed we start to see a little bit of pullback, and especially if we see an escalation between Israel, Hezbollah, and possibly Iran, then I do want to pay attention to some of these gaps that we have, see if we can come down and fill them. The first one being about 462.73. The next one being down here about 451.46. Now, if we only come down and fill one or both of these gaps, and then we set up a higher low, that could actually give us an ABC pattern that could take us right back up here towards all-time highs. On the 1 hour chart, you can see we're almost down towards the zero line. We're trying to firm up here just a bit, but then as we come over and look at the 30-minute chart, we can see we already have a bullish alignment of the moving averages, and we're trying to cross back above the zero line. But we can see that inside day that was formed, and we basically have a D as in dog shape profile. What does that mean? That means on Monday, we're likely going to get a breakout or breakdown from this pattern. So we'll talk about that pattern a little bit more in Monday morning's analysis video. Then as we come over and look at the futures market, notice what we had last week. We had a D as in dog shape profile. So similar to when we talk about a D shaped profile on a daily chart, now we're looking at it as a weekly profile, which means we're likely going to get a range expansion. Now the question is, will it be to the upside or to the downside? Now, to the downside, some of the areas that could be in play would be this minus development area on the profile, along with this point of control down here at 19,078. And if things really got crazy, maybe all the way down here towards this high volume area on the composite profile. Now, I got to be honest with you, I think it's very unlikely this week we make it all the way down there. We will have to pay very close attention to this day by day. Now, another high probability target that we have, and this goes off of last week's volume profile principles, was last week we closed above value area high, which came in at 19,424. Mostly when that happens within the next 1 to 2 weeks, we're going to come back and revisit that level. Last week, we did not visit that level. So that really sets the stage that maybe this week could be the week that we come back and revisit that level. Then we go ahead and we pull for an A to B equals C to D pattern. If indeed the high is going to be set from Friday, that gives us a price completion about 19,409.61. And you know what? That would be just enough to go ahead and take out that untested value area high. Now, as we come over and look at the daily profiles, what do we have? Well, we have that D as in dog shape profile. There's a couple areas that we want to watch, but first, let's talk about value area high. That's going to come in at 19,804.00. The point of control will come in at 19,731.50, and value area low will come in at 19,677.00. So if on Sunday or Monday we start breaking above value area high, then we come back down, I do want to play for the rotation on the way back down. Since we have a D as in dog shape profile, we want to be on the lookout. The first move, meaning the first way we break, could be nothing more than a false break, aka setting a trap. So if we break to the upside, we start breaking the range from Friday to the upside. Watch out for a potential trap. If we start breaking it to the downside, also watch for a trap for a potential move back up. We can see on Friday, we were able to take out that point of control at 19,903, and then we got knee jerked right back down after Jay Powell's Jackson Hole speech. Now, as we come on and look at the SPY on the weekly chart, we can see we had a very bullish close on the candle. However, the range on the candle was much smaller than the prior 2 weeks. We look at the MACD indicator, trying to get another cross back to the upside, and we can see from a weekly perspective, we are almost all the way back up here towards all-time highs. On the daily chart, we had that bearish engulfing candle. Then on Friday, we essentially formed an inside day. Now, to the downside, I do want to pay attention to some of these gaps, but if we can break the range from Friday to the upside, we got to be on the high alert for a potential break of all-time highs. If we start breaking to the downside, then that's when I'm going to get a little bit more confident that we're likely going to come down towards the high volume area at about 544.42. On the hourly chart, you can see the MACD indicator lines trying to pinch together here just a bit. Then on the 1 hour chart, you can see we're trying to get a cross. We may just cross to the upside on the MACD lines. However, I still want to be on alert. We don't have a good separation at this moment. On the 30-minute volume profile chart, notice we gapped up on Friday. The MACD indicator is crossed to the upside. So now if we start breaking above value area high come Monday, we start coming back down. I do want to play the rotation on the way down with a potential for a retest of gap support at 557.31, then maybe coming all the way down here, fill in the gap at about 556.22. Keep in mind, if all we do is come down and fill the gap and then we turn back up, that would be a very bullish phase out here in the market. Now we look at the economic calendar for this week. On Monday, we have durable good orders coming out at 8:30 a.m. On Tuesday, we have consumer confidence coming out, Richmond Manufacturing Index. On Thursday, we have preliminary GDP numbers coming out here at 8:30 a.m., followed by pending home sales at 10 a.m. Then we move on to Friday, and on Friday, we have the core PCE price index, which is the Fed's preferred measure of inflation. Now, is it going to also show that we are still cooling off in the economy, or are we going to potentially get a hot reading? We come over here real quick and we look at the S&P 500. Notice we have this upper level consolidation at this moment. We're right back over here, just above this high volume area. And if we can hold the high volume area right here, we're probably going to make it run all the way back up here towards all-time highs. But in the event we start coming back down, I do want to focus on this high volume area right down here, somewhere about 55.32. And if we look at the weekly volume profile levels, notice value area high will come in at 56.53.00. The point of control will be 56.25.00. And value area low will come in at a price point of 56.14.50. Now you can notice that last week we had a relatively tight range, only 100 points of range, which also lends to the case that maybe, just maybe, we're going to start to see a little bit of a pullback in this market, especially if we see more escalations over in the Middle East. As we come over and look at the daily profiles, this is something I talked about in Thursday night during the live stream, and even Friday in Friday morning's video, was the fact that what if the market were to run all the way back up to where that whole downturn actually started? That could be nothing more than basically shaking out all the lower level shorts, initiate new longs up here at the higher levels, and then go ahead and maybe rug pull it on the way back down. It's going to be critical. We need to see, can we go ahead on Monday and be able to push above the high that we had from last Thursday at 56.65? If so, then it's probably going to be a green light all the way back up towards all-time highs. We look at the daily profile levels. Value area high comes in at 56.58.00. The point of control will come in at 56.50.00. Value area low will come in at 56.26.50. So if we break above value area high, we start coming back down. I want to be on the sell side of the market. Point of control becomes target. Also, value area low, I want to pay attention to this minus development area as well at about 56.32. If we come down towards the minus development area and we start to see a reversal on the smaller time frame charts, I want to look for a potential bounce on the way back up, maybe up here towards the point of control. But again, we got to take it one day at a time. We got to see how the markets are going to open on Sunday night. And do we have more escalations over in the Middle East? Now, if you want to learn a 3-step trend continuation trading strategy, watch this video right here.